All right, let's talk about something that trips up almost everyone with an insurance policy: exclusions. It's basically the fine print that spells out what your policy won't cover. And honestly, understanding this one thing is the secret to avoiding so much headache and heartbreak down the line. You know the feeling, right? Maybe you've even been there. Something goes wrong, you file a claim thinking, phew, I'm covered. And then you get that letter: claim denied. It just feels awful. It feels like a betrayal, like the whole system just let you down when you needed it most. You've been paying your premiums on time, so what gives? So, what is it? Is it just bad luck? Did you fill out a form wrong? Well, sure, those things can happen. But the number one reason, the big one, is something that's been sitting in your policy from the very first day. It's usually in a section we all just kind of scroll past. And there it is. Policy exclusions. That's the answer. Think of these as the official rules of the game. They are the hard lines that define exactly what your insurance is for, and more importantly, what it's not for. Not knowing these rules is pretty much the main reason people get that dreaded denial letter. And this is what's so wild. Just getting a handle on this one concept can help you sidestep up to 80% of claim rejections. I mean, that is a huge number. It proves that knowing this stuff really puts the power back in your hands. Okay, so let's break down what these exclusions really are. I like to think of an insurance policy as a game. You pay your premium to play, and if a certain event happens, you get a payout. Simple enough. But, every single game has rules, right? It has boundaries. Well, in the world of insurance, the exclusions are those boundaries. So here's the bottom line. An exclusion is a very specific scenario that is literally carved out of your coverage. And it doesn't matter one bit if your policy is active or if you've paid every single premium on time. If something is listed as an exclusion, it's just not covered. Period. End of story. Now, I know what you might be thinking. This just sounds like a sneaky way for insurance companies to get out of paying. But really, these rules are here for some super important reasons. They prevent insurance from having to cover things that are predictable, like your old roof just getting worn out over time. They also protect the entire system from gigantic, basically uninsurable events like a war. At the end of the day, exclusions are what keep insurance affordable for all of us by making sure it only covers what it's supposed to: things that are sudden, accidental, and uncertain. All right, that's enough of the theory. Let's see how this stuff actually shows up in the real world. I'm going to walk you through some of the most common situations where you'll see these exclusions pop up. This one is probably the biggest: wear and tear. Insurance is for things that happen suddenly, not for things that slowly fall apart over time. So, for instance, if a nasty storm rolls through and a tree branch smashes your roof, yeah, that's covered. But if your 25-year-old roof just starts leaking because, well, it's 25 years old, that's gradual wear and tear, and that's almost always excluded. Same idea with pipes. A pipe that bursts out of nowhere is covered. One that's been slowly rusting for a decade is not. Okay, here's something that catches a ton of people by surprise. A standard home policy does not cover damage from floods or earthquakes. No way? These events are considered such massive risks that they're just excluded right from the start. But, and this is the important part, you can usually buy that coverage separately. It's an add-on, sometimes called an endorsement. And with that little addition, your protection for something like a flood goes from 0% all the way to 100%. The line between using something for yourself versus using it for a business is another really firm boundary. Your personal car insurance, that's for driving to the store, taking the kids to school, that sort of thing. But the second you fire up a ride-sharing app and start accepting passengers for money, you've just stepped into the world of commercial use. And if you get in an accident, your personal policy is not going to cover it. Same thing for your house. Using a spare room for some paperwork is totally different from, say, running a small factory out of your garage. And then you've got the big ones, the universal exclusions you'll find in pretty much any policy on the planet. If you damage your own property on purpose, obviously that's not covered. If you cause an accident while you're breaking the law, like driving drunk, you're on your own. And those massive catastrophic events, like war or a nuclear incident, they're excluded because the potential damage is just too enormous for any one company to handle. Okay, so you know all this now. How do you actually protect yourself from getting caught off guard? This isn't about being paranoid. It's just about being smart and prepared. So let's turn what we've learned into a super simple checklist. Here's your 4-step game plan. It's really, really simple. First, just find the exclusions section in your policy and read it. Just once. You don't have to memorize it, just get a feel for it. Second, be super direct with your agent. Don't ask a vague question like, am I covered? Ask this instead. What is not covered by my policy? Third, if you find out a big risk you face isn't covered, like you live in a flood zone, buy the extra coverage for it. And finally, number 4, just keep your insurance company updated. If you start driving for a ride-sharing service or you build a new deck, just give them a call and let them know. Look, if you remember just one thing from all of this, please let it be this. Don't assume you're covered. Confirm it. Seriously, the biggest mistake anyone makes with insurance is just making assumptions. The whole system works so much better when everyone is on the same page. So don't guess. Just pick up the phone or read the document and make sure. And that really brings us to the final question you should be asking yourself. After hearing all this, does your policy actually cover what you think it covers? Take 10 minutes this week to check. Go look at the rules of your own game. Because finding out where the boundaries are now is a million times better than finding out after it's already too late.